Hello and welcome to Chart the Markets, our bi-weekly appointment with technical analyst expert Filippo Ramigni. Filippo, thank you so much to being with us again.
It's a pleasure, Marcello. Nice to meet you again.
So, Filippo, why don't you, as always, take us through a few graphs that, from a technical point of view, you deem to be interesting and explain to us what these graphs are telling us.
Yes, interesting thing has happening in the last couple of weeks. First of all, I have to summarize how the market moves in trends, and as three kind of trends in this way: rising, going down, and trading range. Rising is like the chart we are seeing at the moment, is a series of rising highs and low. Every high is higher than before, and every low is higher than low before. That define a rising trend. As you can see, the Nasdaq 100 just is set a new all-time high just yesterday, is inside a rising channel. It means that it has some room to go up and probably reach to 20,000 points. Second chart, and that's the main interest part, we have seen the Nasdaq rising and the DAX in the European market today. Of course, the chart are updated to yesterday, so today is another big move downside. Anyway, as you can see, the DAX has reached the upper side of the channel. The Nasdaq hasn't already, have you seen before? And hitting the upper part of the channel started a correction. So the market is moving upside inside this huge channel. Started from October, was that October 2013. So and now is reaching the upper part of the channel. The DAX is moving downside, probably to reach first support 17,500, and probably it might, suggest might go down until 1700.
Perfect. If we look at, there's been quite a big movement on due also to election trend in France, but also on the Bund. So what is the graph telling us?
So of course, as a technical analyst, we just look at the chart to have all the information we need. But of course, the election, the result of the European election has moved the market significantly. The Bund, for example, is inside. Honestly, this morning has already broken the trend line, but basically as inside this flag or this channel, and the breaking of this channel is going to push the Bund higher. It means the yield are going down, so is a good sign for the bond market. And probably is interesting because basically the first rise we see at the end of 2023 reached the 139 points, is a strong resistance, you can see from the chart, and then this strong resistance put the market down, and now is inverted direction again. So we started 135 and probably will be back to 139 again. So is a sign of buy opportunity on the bond market. As I see in my introduction, the market is always move sideways or rising or descending. As you can see from the Euro USD, there's no direction in at least from December from the 2023. The market is just moving between 105 and say 111, maybe. This is the movement. In the short, so basically we have to wait until some of the levels are broken to understand what is the direction. In the short term, you will see that the markets, the euro dollar stopped at 109 resistance, and now is moving back towards 106, 106.50 around. That is another short-term trading range we are seeing in the last 3-4 months.
What about oil?
Oil is interesting because basically, even in this case, the movement of oil is very close to the euro dollar, to the dollar, honestly, just inverted of the euro dollar. But even in this case, we have a strong trading range between 75 roughly and 90, 89, 90 dollars. This is the movement in the last 3 years. So basically, it is a huge period of time. In the meantime, as I said at the beginning, we are registering a series of highs and low, descending highs and low. You see, every high is lower than before, and every low is lower than before, and that characterize a short-term rally. And so basically, in this situation, the WTI could further go down, reaching the lower part of the trading range, say below $70. It's interesting because everything is going to change if the WTI was able to go up $20, $25, 20, $50. That would change the situation, and will feel in the short time rally we will be over, and we will decide another situation to figure out.
And now on Apple, what is happening?
Its history in Apple is very interesting because after a long time of consolidation, you see a sideways across the close to the new all-time around $200. The breaking of this consolidation time is a buy signal, and in fact the stock already rallied until 220. But just taking the wide or the wife of this trading range and reporting from his breaking, we can spot at a target for Apple that is around $230. So it means that the stock has already room to go up, and every small short-term correction would be a buy opportunity. Of course, the situation goes on with the Nasdaq 100 chart we see before that was already going.
Perfect. We remind our listener that there are always internship opportunities in our 4 team at Mercury Partners Academy, like with our guest on technical analysis, Filippo Ramigni. You can keep following him and other guests on all our social media channels. And of course, also Filippo has got his own blog that you can follow directly. As a disclaimer, what we are saying today is merely an educational video, so we do not wish to give any investment recommendations. This is very important because those is primarily an educational video, and we do not issue an investment recommendation. I thank you again, Filippo Ramigni, for his contribution technical analysis, and again, wait for our next video with him and the other guests. Thank you, Filippo.
It's always a pleasure. See you soon.
See you soon. Allora.